This episode of Moontower Business is brought to you by your local State Farm agent, Alejandra de la Torre. Alejandra's team has amazing customer service, knowledgeable staff, and super competitive pricing. They also have a very convenient location in Round Rock, located at 2200 North A.W. Grimes Boulevard, Suite 500. Alejandra's team is bilingual, and they have over 52 years of combined experience in the insurance industry. Alejandra's team is very friendly and helpful, and they always go the extra mile. They even have after-hours emergency availability. So please call Alejandra's State Farm team for all of your insurance needs, whether it's auto, home, life, or business. Their telephone number is 512-244-3311, or you can see their website at www.alexdelatorre.net. Welcome back, everybody, to another edition of the Moontower Business Podcast. This is your host, Joseph Obel, and today I'm speaking to Nik Bhatia. Nik is the author of a book called Layered Money. Nik, welcome to the show.
Thank you for having me, Joseph. I'm excited to be here.
Thanks for being here, Nik. Hey, listen, before we kind of go into the nuts and bolts of Layered Money, maybe I ask you to kind of introduce yourself and tell listeners a little bit about yourself and your background and professional experiences.
Sure. I grew up in Los Angeles, California, went to USC here, studying economics. And then I went to Spain for a year to get my master's in finance in Madrid at IE Business School. And when I was in Spain, I discovered the CFA program, the Chartered Financial Analyst program, and that really gripped my attention. And I realized that what I wanted to do was work in asset management. I wanted to work in the investment world. And more specifically, I wanted to work in interest rates. So I wasn't necessarily very interested in corporate finance or equity research in terms of looking into a single company. I was more interested in global macroeconomics, and I found that outlet with the fixed income and currency world. So that was the world that I really, sunk my teeth into when I was in Spain studying and writing a thesis over there. When I came back to California, I started my professional experience in the fixed income industry at a hedge fund that was focused on mortgage-backed securities and other credit instruments. And I was an analyst there. I wasn't really involved in the investment process as much as I would have liked to have been. Then a couple of years later, I got a great opportunity to join a trading desk as a money markets trader at a fixed income firm. A multi-sector fixed income firm. So they were doing corporate bonds, mortgages, but also treasuries and overall global macroeconomic strategies. So I started on the trading desk there, trading treasury bills mainly and treasury repo. And in only a matter of a few months, I started to take over more and more responsibilities. And by the end of the year, I was trading the whole U.S. Treasury portfolio and Treasury futures and other interest rate derivatives. And I stayed there for a few years, and I really did have the, professionally speaking, the time of my life on a trading desk. It was a perfect place for me to learn, to engage with some of the smartest people in the world in terms of just macro thinkers. Getting to read all of their research. So I'm referring to, the strategists on Wall Street itself at the investment banks, a lot of brilliant people writing research reports over there. And, just trading the treasuries themselves in numbers, sometimes over $1 billion per trade. And all of that was just incredibly exciting to me. And I really got to build my repertoire of fixed income skills. And I also got to dive into interest rate strategy as well. So after being, a good trader for a couple of years, they started to give me more responsibilities in terms of where do you think interest rates are going? And with that, I was really able to put my portfolio manager's hat on for the first time. And so that, that whole experience lasted several years and was something that was really important to me in terms of learning and building my experience, and also learning about the Federal Reserve and our monetary system and how that all worked. However, during that time, I also fell down the Bitcoin rabbit hole. And so my mind share started to leave, incrementally leave fixed income and go toward Bitcoin. But I do think that they are related. This is what we cover in Layered Money, my book, how money is really one story. Bitcoin is the current chapter of that story. And the story can go back, several hundred years. So bringing it all together with my book, Layered Money.
That's great. You're also an adjunct professor of finance at the USC Business School. Is that right?
That's right. So I teach the fixed income course at USC Marshall. Right now I'm teaching the undergrads. I also teach the grad students as well. And that's a great experience for me, being an adjunct professor at USC, going to USC and having it be my alma mater. It's a huge honor for me to teach there. And I love engaging with my students. And part of the reason I wrote Layered Money was because my students, which it's a fixed income course, it's not a Bitcoin course, but the students were interested in what is the future of money and what does it look like and how is it changing? And we really need to involve Bitcoin and digital currencies if we're going to answer that question correctly. So the book was also an attempt to, once my students are finished with their course, look to the future, and this is something that you can read to explore those topics.
Gotcha. So you said, so what year was it that you actually kind of discovered Bitcoin and started kind of falling down the rabbit hole and learning about it? And number two, I guess, what kind of things did you read to learn about it? Were there books? Did you watch videos or different things?
Absolutely. It was 2016. The year that I fell down the Bitcoin rabbit hole. And the reason was actually because of the price. And because as a trader, as an investor, I'm also a chartist. I'm a technical analyst. I stare at charts all the time because I think that charts are merely a pictorial representation of behavior. And behavior is the core of markets and how we analyze buyers and sellers. So I think charts do a great job of showing us, really illustrating what buyers and sellers are doing in the market. And at that time, Bitcoin was bumping up against its previous all-time high in that $1,000 area. It had fallen down to $200-300 and was rising again and was about to challenge that all-time high. And when I looked at the price chart, I said to myself, if this thing breaks 1,000, 1,200, it's going to demonstrate another parabolic move. And that was my investment thesis at that time in 2016. So I wanted to go long Bitcoin, but then I said, how do I do that? And that's when I started to, you start with Google, a little bit of YouTube. Then I found a couple, very important podcasts at that time that, might not exist anymore, but they were really overviews into Bitcoin. And that's when I also read Nathaniel Popper's book called Digital Gold about the history of Bitcoin. And that had, an explainer of how Bitcoin worked as well. Then I read the Satoshi Nakamoto white paper. And then I read Mastering Bitcoin by Andreas Antonopoulos. And I think with that book, it's a computer science textbook. So obviously a lot of it went over my head as a financial person, but I know software enough just on the surface to understand that Bitcoin was truly something novel. It had never been created. It was a printing press type of innovation, once in a century, once in a millennium type of innovation. And that's when I just started to really dive down the rabbit hole, listen to every single podcast I could. There weren't a lot of Bitcoin books back then. It was like Andreas Antonopoulos YouTube videos and Twitter. But now there are a lot more books about Bitcoin for people to read. And I would suggest that if people are trying to dive down that rabbit hole, buy a book with the word Bitcoin in it. Don't buy a book that says blockchain or cryptocurrency first. Bitcoin came first. Bitcoin is the innovation. So start with Bitcoin if you're going to dive down that rabbit hole.
So you were in the finance world, you were a trader, you had experience with macroeconomics. How do you think the way that you dove into Bitcoin, I guess your experience and your background, the lens that you looked at it in, how do you think that kind of played out?
It's a good question. My investment thesis toward gold at the time was in sync completely with this idea of Bitcoin being a non-government currency. So I actually had a natural link to Bitcoin through this thesis of gold. So I think that was definitely a big part of it. But then here's the other part. Sitting on a desk and trading $1 billion a day sometimes and looking at a market cap of Bitcoin at the time at $20-30 billion, it was obvious to me how small it was and how much room there was to grow. So people today can get scared by a $50,000 price of Bitcoin, but without the context that the size of money in the world is probably somewhere north of $300 trillion. So when you're looking at a $1 trillion asset class today, and 5 years ago it was 20 billion, you're talking about something that was less than, was just over 1% of $1 trillion, which is only less than 1% of how much money there is in the world. So that perspective of the size of the dollar world relative to gold, relative to Bitcoin, gave me scope. And that, I think, it fueled a lot of my investment thesis, just thinking how big Bitcoin's market cap can grow to if it is to fulfill this destiny of world reserve currency. It's definitely north of $1 trillion, at the time. So it was definitely like a 50x to me back then and a no-brainer. But even today, I think it's another 50x, if we're looking at a decade or two.
That's super interesting. I mean, that's a good point. The average person sees a $50,000 Bitcoin price and gets scared. But when you zoom out and look at the economy in kind of a 50,000 foot view, you get a better perspective, like you said you did. And that's really cool. So when did you release the book?
I released the book on January 18th of this year, 2021. And so it's only been out just over a month. The audio version of the book is coming in March. The demand has been tremendous, and I'm very excited to put that out to people. So I'm listening back to it right now. And I know that there are thousands of people that are waiting for that audiobook. So I'm excited to release that soon.
That's awesome. And then I think I saw, it's available kind of all over the world. Generally, where can people buy it in the United States? And I guess anywhere.
Yes, people can go to Amazon and find it there. Layered Money. The full title of the book is Layered Money from Gold and Dollars to Bitcoin and Central Bank Digital Currencies. They can find it on Amazon, Barnes & Noble. Go to your local bookshop and recommend that they stock it on their shelves. Tell them that it's the number one new release on Amazon in digital currencies and money and monetary policy. So we've sold several thousand copies already in the first month, and people are stocking it all over the world. So Amazon worldwide, your local Amazon websites will should all have it. Walmart has it now on their website, and again, just Google it, you'll find it.
Great. So as everyone knows, Bitcoin can be a pretty difficult concept to understand for anybody. When you wrote this book, what would you say is your target audience?
My target audience is the reader who is curious about Bitcoin, but maybe doesn't know a single thing about it. And so we have to tell the story of money first. And because I'm targeting the average reader, I had to really simplify money. It's a very complex topic, especially when you get into the way that the current dollar system works. So my attempt was to simplify the whole arena of money and Bitcoin as much as possible to the reader that maybe has never read a book about Bitcoin or about money. And I had a great team of developmental editors, basically friends and family in my circle, that helped me get this book to the layman. And really, people in my circle, family members, told me, you lost me in chapter 5, you lost me in chapter 6, you lost me in chapter 8. And so I, painstakingly combed through every sentence to make sure this book is as approachable as possible. And the feedback that I'm getting from the public, from around the world, confirms that I was able to do that.
Absolutely. I read your book. I really enjoyed it. I fell down the Bitcoin rabbit hole. I think it was summer of last year, around July. I read the Bitcoin Standard. I listened to a bunch of podcasts to learn about Bitcoin. And this is something I wish I would have had when I was first getting started, because I feel like you make it simple enough for the average person to understand the mechanics of what Bitcoin is and how it works. And then you do the same thing, I think, for the history of money, and going back really far. And that's another thing I want to talk about next. I guess, can you start by just kind of describing the concept of layered money?
Yes. So I start the book thinking about money after people had agreed that gold and silver were money, but before people started to strike coins with gold and silver in them. And so that's the mindset to start with, is that humans decided that this precious metal, or these two precious metals, were the best forms of money because they were durable, they were rare, and they were recognizable, they were testable in the ancient times, but they weren't very measurable. And so that measurability, the lack of measurability of one person's gold necklace and the other person's gold bar, it slowed down the ability for people to transact with each other. Coins then solved that problem, where if I had a gold coin that you recognized and you have a gold coin that I recognize, we can exchange really quickly with each other because we don't have to sit, measure, test everything. And so the invention of coins themselves was a huge invention for money. And so that's where I start the story, is this idea that coins give people a common language, this denomination, how we all name our profits and our expenses. And then the story officially begins in northern Italy, in Florence in the 13th century, when they strike a coin called the florin, the fiorino de oro. And this coin that they struck in the year 1252 maintained an unchanged purity for over 300 years. Wow. Spanning 4 centuries. And that unchanged purity of the gold florin allowed for a layered money system to be built on top of it. Now, we can think of that gold florin as the first layer of money. It's a counterparty-free asset that doesn't come from a balance sheet. It just comes from the earth. And if you have possession of it, it's yours. That's what I mean by a first layer money. But then these promises to pay florin, so like think of it like a gold certificate or an IOU, we call that in the book a second layer money, where it's a promise to pay the first layer. The first layer of money is the asset. It's the commodity. The second layer is a promise to pay. It's a piece of paper. It's an IOU. And so that's actually how our whole monetary system was built, and still how it works today, where fast forward to today, if you have dollars in a checking account at Chase or Bank of America, you have a bank deposit. That bank is issuing that deposit to you, and that's a liability on their balance sheet. Their assets at the bank are either reserves held at the Fed or other types of high-powered money. And the Fed is issuing the reserves, so it's a liability on the Fed's balance sheet. So actually today in our layered money system, US Treasuries are on the first layer of money because that's what the Fed owns. Fed reserves are on the second layer of money because that's what the Fed issues. And then the checking account deposits that you and I hold are on the third layer of money. And if we switch our thinking about money from just cash or money or Bitcoin to first layer, second layer, third layer, we can then start to understand that checking account dollars and Bitcoin are not comparable to each other in any way. Visa and Bitcoin are not comparable to each other. Doesn't make sense. Comparing Bitcoin to other alternative cryptocurrencies or stable coins or central bank digital currencies, it's also, you're not comparing apples to apples at all. And only with this layered infrastructure, this layered framework, can we begin to tell this. So I have these illustrations throughout the book, these pyramids that show the first, second, third layer of money and how they evolved, really over the last 800 years. And people are loving the illustrations. And I do have to figure out a way to get the audiobook people the illustrations so that they are, staying with the book as they go along.
It's definitely helpful. I'm a visual person, and to read that and see the graphic there is definitely helpful to visualize it. You gave an example of 3 layers of money there. Are there situations where there could be more layers?
Oh, absolutely. I mean, think about Venmo. Venmo or PayPal are connected then to your checking account. And so that's a 4th layer of money. And so, yes, I mean, the layers of money can go on and on. I didn't want to even entertain the phrase 4th layer money in the book because, when you're building a new framework, you want to make it as simple as possible. But absolutely, there are, just think of Venmo as the 4th layer of money in my model.
And so you would say, I guess, that if you hold private keys to BTC, then you have first layer money.
That's absolutely correct. You have, and that's what's so powerful about Bitcoin, is that it empowers people to have direct access to a first layer money. And that's very special. And that is why we also have to define Bitcoin as a first layer money so that people don't mistakenly compare it to Visa or the US banking system. Or even, the dollar, because the dollar itself is issued by the Fed and commercial banks. So, we have to think of Bitcoin as this first layer of money and really can only compare it to gold if we zoom out far enough. There's nothing really else that we can compare it to in history using the layered money framework.
Gotcha. So jumping back a little bit to the history of money, I thought it was really, really intriguing to find out some of these kind of important points in history. I know you noted the first sign of gold and silver coins was in modern day Turkey. I think it was 700 BC. Can you touch on some of the other kind of really important points in history for the evolution of money?
Sure. So after the first coins in 700 BC, we have a great example during the Roman Empire. So, around the birth of Christ era, that currency devaluation from the Roman Empire over the course of a few hundred years leading to the collapse of the whole empire is an important example that governments can cheapen money. And so that's something that we have to keep into context when we think about how amazing the unchanged florin was for 300 years. And after the florin and the building up of a layered money system where this network of promises really allowed money to fly around a lot quicker because you didn't have to use coins. You just had to use a network of bankers. That ended up in Antwerp in the 16th century, in which the money market was born, where actually these promises to pay gold started to function as cash themselves. So that's where the idea of currency notes comes from. That comes from Antwerp. It was an innovation during the 16th century, where when people issued promises to pay, they started to make them more anonymous, meaning they didn't have people's, both parties' names on them. And so these currency notes, these promises to pay gold became cash instruments themselves. Then they started to carry interest rates themselves. So that was an important time in history. Then fast forward to the Bank of Amsterdam and the Bank of England. these are the first two examples we have of central banking, where a central bank comes in and actually monopolizes the relationship between the first and the second layer of money. They basically capture all the gold and silver within the economy, and the liabilities that they issue, so like Bank of Amsterdam deposits, are made, they force people to use that form of money over all other forms of money. So the second layer of money then is a monopoly by the central bank. And that's the situation that we have today with, legal tender laws, where we're forced to use the dollar for commerce. We're forced to use the denomination, the currency issued by our central bank. And that's pretty much the standard around the world today. But we know that with Bitcoin, things are changing. And, this is where the conclusion goes in the book, just to fast forward a little bit, is that Bitcoin gives us the freedom of currency denomination. It gives us the ability to say, no, I choose to have some or all of my wealth and my earnings in a currency that's not tied to a government. And I guess in theory, people can do that today with gold, but it's extremely difficult. You would have to, constantly, sell all of your incoming dollars for gold and then sell your gold for expenses. It's just a clunky sort of thing to think about doing today. But Bitcoin changes that. I mean, we're talking about digital money now, money that can be transferred over the internet, money that can be swapped for dollars now extremely easily, both ways. And not only dollars, but 100 different currencies around the world. And now hundreds of alternative cryptocurrencies and alternative stable coins in different currencies. This ability to switch between BTC and everything else is becoming easier and easier as time goes on, giving us this ability to, at least at the very minimum, dual denominate our balance sheets. Think in two currencies at the same time, if not progressing away from the dollar entirely. Maybe not today, but in the future.
Absolutely. Just to jump around a little bit here, another interesting point I saw in your book that I liked is you mentioned that in England it took, I think, about over a century for them to adopt the gold standard by law. I mean, that's a long time, and gold had been used as a medium of exchange for a long time before that. How would you describe how far along Bitcoin has come in, I guess, the 12 years that it's been in existence?
It's pretty remarkable. It really is. Reaching $1 trillion market cap this year is a huge milestone for Bitcoin. I think it's pretty officially mainstream now with the price. That's not even something that you would be able to say 12 months ago. It seems to be at the front of a lot of people's minds. And, with another 2017 type of year, it puts, potentially this year, it puts Bitcoin right up there in a top 5 currency in the world, and a huge geopolitical force. And so the volatility of Bitcoin's price presents challenges in adoption by the mainstream or by countries and central banks. But it doesn't stand in the way for adoption by the rest of the world. And people are smart and they are nimble, and people own companies too. So companies thereby have some degree of smarts and, flexibility. And so that's why we see companies coming in as the next buyer. Investment managers are also slow, but hedge funds can move quickly. And so they are coming in and buying. Governments and central banks will be last, and banks as well will be last. And so that's when you start to get to, this full adoption of Bitcoin as a core tool for the monetary system, something that is just one side of every transaction. When we think about interest rate swaps or foreign exchange swaps or stock trading, there's always a cash component and a counterparty component to every trade. And, Bitcoin is going to start to be at the middle of all of these, multi-trillion-dollar transactions that happen on a daily basis in the foreign exchange market, for example. So it's come a long way, and I think we are pretty close to streamlining Bitcoin with the rest of the financial system. But again, its price volatility will still cause people to think that it's a bubble or tulip mania. I think still for some time to come.
That leads into my next question perfectly. A lot is going on. The Bitcoin ecosystem is moving quickly, as you well know. I think even since you've released your book, there's been some big milestones. Tesla's bought $1.5 billion worth of Bitcoin. We had an all-time high of 58,000 people on Wall Street are buying Bitcoin. Do you think, I guess, number one, where are we on the Bitcoin timeline? And number two, are we still going to see a snowball effect of institutional investors coming in, even though there's that volatility?
Yes, we will see institutional investors come in despite the volatility, because price is truth and people cannot deny the success of Bitcoin. And people love to chase momentum, especially on Wall Street. And there's no momentum like Bitcoin. And so people will still, continue to get involved. Where are we in the grand scheme of things? Probably the third or the fourth inning, to use a baseball analogy. The second or the third inning was that 2017 bubble, and I use bubble with air quotes because we know now that wasn't a bubble. It was just a preview. And so, whether or not this is another preview as we pump the price, or if this is actually going to lead into more of a, fourth, fifth, sixth inning type of integration with the financial system, is yet to be seen. It's hard to predict, but definitely still early. When do we get into the middle innings? When Bitcoin passes gold in terms of market cap. So that's at about $500,000 approximately per Bitcoin, and a $10 trillion market cap. So a 10x of where we are today at 50,000. That's when we start to get in the middle innings, and Bitcoin starts to shed this idea that it's digital gold and more just adopts this idea that it's a or the global reserve currency now. And then you set your sights on the next, the next phase of Bitcoin, and those would be, the later innings.
That's good. Towards the end of the book, you had a section I also really liked. It's called A Vision for the Future. You talk about governments and corporations around the world purchasing BTC to hold on their as cash reserve. You talk about CBDCs. Can you kind of just give a summary of your thoughts on what the future looks like for the monetary system around the world and for Bitcoin?
Yes, I see the world of money going 100% digital. And that's different than today you using your smartphone apps. Those are still, it's digital money only in appearance, but behind the scene, it's actually the traditional money rails. And that money doesn't actually settle until banks settle with each other via FedWire, over the next 24 to 48 hours, or, 3 to 4 days, depending on if it's a weekend. Digital money, truly digital money, meaning Bitcoin and other currencies that use this idea of a distributed ledger, that will be all money, including central bank money and bank money. So all money will gravitate towards this structure of being, semi-auditable. It would be able to track the supply of different forms of money with free and open source software. That doesn't mean that you and I can confirm transactions that go through the Fed or have any say in the monetary policy, but at the very least, we'll probably be able to see in real time supply and things that are going on there. So my vision for the future is a Bitcoin-centric financial system in which all digital assets, central bank digital currencies, stable coins, other cryptocurrencies, find their base price in Bitcoin. Just like we think about all foreign currencies having their base price in dollars today, all currencies, digital from governments, central banks, and other cryptos will have their base price in Bitcoin, and the world will gravitate toward this BTC denomination in which balance sheets are denominated at the very least in, at least Bitcoin, and then maybe a home currency as well.
Very good. I got a couple more questions for you here before we wrap up. The first one, I guess, what kind of feedback or what kind of things are you hearing from your students at USC in terms of buzz about Bitcoin? Is the younger generation excited about this?
The younger generation is interested in it, and but I still would say that the percentage of people that are going down the rabbit hole is the same as the rest of the populace. So I wouldn't say that there's an over-enthusiasm necessarily just because they're 20-year-old students, but they are interested in how the financial system works, and eventually, if they will find my book, of course, and other things that lead them into thinking about Bitcoin and its role in the future.
So obviously there's a future in Bitcoin. What are your thoughts on the future of like altcoins, like for example, Ethereum? Do you think we're going to see a evolution of like DeFi and smart contracts going into the future? Or you think this is just kind of a temporary thing?
I'm not sure how other cryptocurrency projects are going to unfold. And, there's a reason that I didn't mention any of them by name in the book, is because when we're looking at multi-century monetary evolution, Bitcoin is the only thing that is relevant to that story today. The rest of the cryptocurrency universe, smart contracts, lending via these platforms, is something that is quite similar to the world of securities, the world of lending today. There's nothing really different about it. It's just projects that people invest in, and maybe the projects have profit in the future, maybe value accrues to the project and the token, and maybe it doesn't. And so it's not my area of research to get into basically projects that come from companies. Bitcoin is this really magical digital commodity that doesn't have a center of origin, and that's what makes it special.
Very good. So where can folks go online to learn more about you and learn more about Layered Money and to buy the book?
People can find me at layeredmoney.com. You can find the book on Amazon worldwide by searching Layered Money. You can follow me on Twitter at Time Value of BTC. I'm really excited to just hear from you. If you want a signed copy of the book, contact me at layeredmoney.com, or if you have any questions, just reach out to me there. And I look forward to hearing from readers from around the world. Listeners,
I've read this book. I highly encourage you to go out and buy it. It's a great history of money and analysis of Bitcoin and what the future looks like. So please go out and check out this book. Nik, thank you so much for coming on the podcast. I really appreciate it. And thank you for sharing your story.
Joseph, thank you so much for having me. I appreciate it.
Yes, sir. This episode is brought to you by our affiliate Gemini. Gemini is a well-respected cryptocurrency exchange started by Cameron and Tyler Winklevoss. If you're interested in purchasing Bitcoin, Ethereum, or other altcoins, please check out their website at gemini.sjv.io/Moontower to learn all about it. Thank you.